Welcome, everybody, to the Chinchilla Pickin' Podcast. It is January 19th, 2025 at 4:13 p.m. My name is David Underwood, and I forgot to say, as always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I am joined by the one and only, I don't even know what to call you anymore, Brandon Beaver.
Captain Amazing.
Yeah, there you go. Brandon, huge week. Huge. It's gonna be huge. Trump takes office officially tomorrow. That's gonna affect some things, of course, as always. TikTok got banned, got reinstated,
Yeah,
all within a day.
I know.
So, I mean, that
So
has
here's
to.
here was my reaction to that, right? Banned. Oh my God, that is so stupid, but awesome. I'm gonna make some money on Tuesday when the market's open. And then reinstated. I was like, great, reinstated, First Amendment, all that good stuff. Government shouldn't be stepping on these companies' rights to operate within the United States, all that stuff. And then crap, I'm not gonna make that money anymore.
Right? Yeah, we had some good opportunities we talked about 2 weeks ago about what happens if it does go through, what some companies should look at, and now none of this is going to matter anyways.
Yeah.
So
Yeah.
wasted some wind,
So
wasted some
far,
wind.
at least. So far. I don't
Right?
think the drama's over with that.
It's not. I mean, he's what is he only staying it for a while, giving it a reprieve, like 90 days or something. I don't know.
Yeah.
So it's still got to go through the courts and be, or not courts, but something, Congress, something.
Yeah, so the last I heard, he wants the US government to take some ownership of TikTok. That was the way the wording made it sound like. And maybe I misread it. Maybe it's a company taking ownership of it. But the last thing I really want personally is publicly funded social media. I,
I mean, we already see BBC. We don't need another one like it.
yeah, yeah. And there's already enough interfering into the operations of Facebook and Instagram and X and everything. So we want less of that.
Yes, we do. Yes, we do. So yeah, there's that news that happened. I want to talk real quick, just 2 3 minutes before we get into the show, Brandon. Last week, I don't know if you're aware, Brandon, but I did a quick episode by myself.
Yeah, I I
So,
I, I heard.
and I did make some calls. I called Cooler if it dropped below two to buy it. It dropped below two. I bought it. I hope you guys did too. But then it jumps up so much so fast. It gapped up really fast. I just went ahead and sold it and took a nice fat gain on 30%. So that was thank you, Cooler, for that big gain in 2 days worth of time. And then I know I've talked about rig and oil a lot over the show over the last 3 months since I entered my position. I got out of it this week. It jumped up to over 420, and the reasoning why I got out of it is I continue to see I see some hawkishness and bullishness in the oil market, but I see too much headwinds towards Transocean in particular. There are companies that announced this past week that they're looking at countries, not companies, countries that announced they were looking at cutting some oil drilling off their shores, and that directly affects some of Transocean's rigs in themselves. And I just see too much of that going on right now. And we're not going to be seeing any kind of the money from that big giant oil rig that I keep talking about from Transocean that just launched in this quarter's numbers. So I said, there's too many headwinds. I'm getting out. I feel like it's going to turn the other way in the opposite way. So I exited both positions, both profitable. 5% gain in rig for myself, not the profit I wanted, but it's profit, and then a 30% in cooler for myself. So very happy with those results from this past week.
Yeah.
But yeah, we got some things to talk about in the show. I know Brandon has some things. He knows what I have. We're kind of both aligned this time. Nobody's going to argue that I'm aware of.
Ooh, we might argue on my call. We'll see.
Oh, okay. This is
It's
going to be fun
possible.
then.
It's
This is going to be
possible
fun. All
because you
right.
don't know the company that I'm going to call is by.
Oh, yeah. Okay. All right. Fair enough. All right. So let's get into it. Rules, rules, rules. Brandon and I get together 5 to 10 minutes before the show and we tell each other what we're going to talk about. You hear the live back and forth, the bicker and the banter right here on the show for you. Brandon, take it away.
So let me ask you this, and maybe you could take a guess, maybe not. I don't know. There's a company that has had the past 10 years, over 10 years, 2,100% growth in the stock price over the past 10 years. Um, and the price to earnings ratio is still sitting at about 16 even.
Well, you asked me what company this is?
Yeah.
Uh, it's Netflix, Chipotle, Facebook.
That would be
No.
Meta. No, no. Builders First Source.
Oh,
Yeah. Now, they are
okay.
a manufacturer of building materials, manufactured components, construction services tailored for professional home builders, subcontractors, remodelers, and individual consumers. 43, I'm sorry, 500 and some odd stores, 570 locations across 43 states. They deliver integration solutions by offering manufacturing, supply, installation, and comprehensive range of structural and related building products. We were 10 years ago coming out of the Great Recession, which was mostly, homes. It was a big housing recession, right? So to be fair, they were coming from almost nothing 10 years ago. They were I don't know if there's been any share buybacks or any splits or anything, but from what I was looking at the chart, it was about $1.70 and somewhere around there, 10, 11 years ago. So it,
Nice. Well, I mean, that's a big return, but why did it have such a big return, even after the 2008?
we'll get into that. We'll get into it. It's been good leadership. They've got a new CEO named Peter Jackson. He was put in place as a planned succession.
So this
So,
is what he does after Lord of the Rings.
right, right. But this was a planned succession. This wasn't, we booted the last CEO out because he was doing terribly. This was the CEO did a good job, planned on retiring, did retire, and then hired somebody else to fill in the spot. So he gave an interview with, I can't remember if it was Market Watch or what website it was that caught my eye a couple of days ago, but I'm going to go over a couple of the things that he said in it. So, just to give you kind of a little bit of a deep dive into this, um, manufactured products represents 28% of their sales. This was from 2023's full year report. Windows, doors, and millwork were 25%. Lumber and lumber sheet goods were 24%. Specialty building products and services were 23%. Last year, the stock did not perform that well because they're still handling some of the inflation issues and things like that last year. And nobody really wanted to build a house in the environment that we were in, right?
Yep.
But what's kind of holding them steady is that about 15% of their business is installed already. So, what do people do if they're not going to buy a new house? They'll remodel their current houses. They're going to have to replace their windows, their doors, and such. That's about 15% of their business, and it's the fastest growing segment in their business right now. So that's providing a floor to the stock. And I'm picking this company right now because it's at a good value. It's had good leadership, sustained growth over the past 10 to 15 years because of it. And I don't really have a catalyst for it other than the fact that inflation I think, is probably going to stabilize. I think it's going to continue to stabilize over the next year or two. And even then, even if it doesn't, I think you buy this company and you just hold it for a long term. Traders need, um, some sort of catalyst, right? That's what they trade on is catalysts and momentum and things like that. Investors don't necessarily need it. You could just buy good companies and hang out and wait for a catalyst to come
Now,
up.
how long, how much is it up since 2008 again?
1,200%.
Okay, so it beats Home Depot. So Home Depot, since around that same time, is up about a little over 500%. So I'm trying to see how it compares to its peers to see if it is similar charts for everyone for the same period. So Lowe's, again, same exact structure that you're seeing there. Lowe's is beating it. Lowe's is beating it over the same period.
It is.
So is
It
this
is.
a sector thing that you have going on? Or
No,
is
it's
there
company
something that
specific.
you particularly like about this versus a Home Depot or
It
a
is
Lowe's?
company specific. And give me just 1 second because I'm trying to nail down this percentage that it's higher on. 1 second.
Okay, yeah, I mean, I was looking at, but I like Home Depot, right? I like Lowe's, but Home Depot has a better commercial business. They have a stronger commercial business that they work out to more contractors. And I look at both of these. They usually do well. They continually grow over time. They haven't had really a overall negative couple years in a long time. So there's something you would stick your money in and leave it, like a Costco. You put your money in Costco, you leave it, you don't touch it, it will grow for you. And that's where I see the sector, but I don't see right
Okay.
now. Lowe's has outperformed Home Depot,
So
but
by the
both
way,
have
this
done
is,
extremely well.
well, let me correct myself because it's up 2,100%. 2,100%.
Yeah, so that beats Lowe's by a little bit.
Yeah.
So it's the top of the three.
Right. It's there.
Yeah, but
Yeah.
why? Why is it the top of the three?
I'm gonna go into it.
All right, get into it. Let's hear it.
So one of the things that they want to talk about, right, is when he was doing this interview, it's not just about home building. People were not wanting to build homes last year because of the cost of it. Um, they've had significant investments in technology that allows them to figure out how to build houses for cheaper but do them better. So he was talking about how a lot of housing builders, they would just add a bunch of trusses to make sure that, the building's going to be structurally sound. Um, you don't need as many as what traditional home builders would use. You just need to have them built better. They need to be better quality, right? So, roof trusses made with computer software and engineered plates for precision and speed. That's where they're going out with the roofing to make that cheaper. Builders FirstSource holds 20% of the market for home building. Um, they are double their nearest competitor. So they've got a pretty good sized moat there when it comes to manufacturing for builders. Um, but the rest of the market is still still a very fragmented market here. So there's still room to grow. Um, as I said, 15% of the business involves installed services, framing, windows, millwork, doors, anything that you would do during a remodel if you're going to keep your house. Um, Builders prefer to sell houses right now rather than build them, but that I think might change as inflation starts to level out. Go ahead, Dave.
So I don't know if you're aware of this, but for 9 months, I worked for payroll for a framing company in Southern California.
Mhm.
I'm very familiar with how houses are built and trusses and what they are and how they work. And I question this company in saying that, like, hey, we don't need as many trusses. We just need better materials. And that makes me wonder, is it really, I mean, are they in like maybe non-tornadic areas or non-hurricane areas, or is this actually scientifically holding up to be true? and the other companies are just wasting materials by putting in more trusses than they need. Because that makes me question it.
I
I
mean,
mean,
I'm not.
I've seen a building go up from the ground up. I know what it looks like. I know where trusses play an important role.
I mean, I'm not a builder myself, but they have, 570 locations across 43 states. As far as technology goes, they acquired Paradigm in 2021. That gives them expertise in configuration software. Um, they developed mybuilder.com, which is a end-to-end platform for builders, which is responsible for about 250 homes a year right now. This was released in February of, I think it was last year. To make home building more efficient and more affordable. That's their goal. That's one of the reasons why they're dominating this market right now.
Well, yeah, they're charging the same amount of money for less trusses, and they're saying
I
it's
don't
better
think that.
quality.
Oh, hold on, you don't say no. You don't have access to the numbers. You're not looking at the numbers to say that they're charging the same amount of money. You don't know that.
I don't know that. I'm just. You're right. I am talking out the side of my mouth here. I apologize, but that's what it sounds like from my point of view right now.
So there was a study called the McKinsey study, which showed minimal productivity improvement in home building over the past 100 years. They believe they have a unique capability in truss manufacturing with 125 truss plants nationwide. Um, they say that modularization offers potential. They say future vision involves leveraging technology, robotics, and process improvements. They've got the digital platform to support third-party firms in precise, reliable environments and potential for building larger components of houses, though not necessarily mobile or modular homes. So the whole point is to do this cheaper and
Yeah,
more efficient, but not just on the company's end, but on the end users end as well for the customers, so that it's more affordable for people to still continuously build houses, right? Even in a high inflation environment.
yeah. I'm
Uh,
just playing the devil's advocate, man. I'm not familiar with this company. I am familiar with their competitors, and I have some experience in framing and building.
okay. Well, you already set me off with your text about the Dallas Cowboys not having a playoff game today, so I'm a little on edge.
I'm sorry. Sorry about that.
Well,
Sorry, I'm laughing off camera right now as he's saying that.
here's a direct quote from Peter Jackson, the CEO. So they're around 20% of the market right now. So they're quite large, more than twice as big as their biggest competitor. But in a market that is this fragmented, there's still a lot of opportunity to do deals and grow. If you think about what we do on the value add side, we're not just capturing the market for materials, we're capturing it for labor too. So there's a tremendously large opportunity. About 15% of their business today is installed. So when we're responsible for hiring and the input of everything from framing to windows to millwork to doors all over the country, that's probably the fastest growing part of our business right now. So again, that kind of goes back to if we're not building houses, we're remodeling them so they're still getting some revenue that way. And it's about a fifth of their business.
Nice. All right. Good enough. Fair enough.
And again, I don't necessarily have a catalyst here, right? Because I could say that inflation's going to level off, but I don't know that. If it does, this company does well this year.
Well,
Uh,
if you look at the historical 10-year trend of the sector, like I said, I pulled up Home Depot's, I pulled up Lowe's, you can pull up this company. Every single one of them's killing it over the last 10 years. Home Depot's the worst performer over the last 10 years at 625%.
yeah,
I
we
mean,
did
that's
it.
the worst.
Yeah, I don't remember if it was last year or the year before, but we did an entire episode on Lowe's versus Home Depot. Go back and look at it. It explains the reason why Home Depot's not keeping up with Lowe's. Home Depot may actually catch up though this year if inflation can level off and if we can get home building back on track again, then Home Depot will benefit.
Yep. Oh yeah,
So,
they're big in that area. All
yeah.
right, cool. Builders first. What's the ticker?
BLDR.
BLDR. Got it.
I've called on this show a couple of home builders in the past that I thought were pretty good, but this will be the first one that I actually purchase on Tuesday.
Okay, you are gonna buy it.
I'm gonna buy the stock, yeah, and I'm gonna hold on to it. Sometimes if you're investing for the long term, you don't necessarily need a short-term catalyst other than good value. Because if you wait for that catalyst, then sometimes it gets priced in too fast, and then you chase the dragon. I think since the past 19 days, I will say this, in the past 19 days, since January 1st, this stock is up about 12%.
Yeah, I'm looking at a chart right now. I'm seeing all this. It's had some sporadic movement over the past 12 months here, up, then down, then up, then back down, and now it's on its way back up again.
This is my first call for a buy this year, and it may very well be my most risky, but we'll see.
Taking some risk right out the gate, man. I
Just
like it.
because just
I
because
like
it
it.
relies on inflation. If the Federal Reserve comes out and cuts more interest rates and stuff, then essentially this stock is probably going to go up really high on interest rates cuts, right?
Yes.
But then we got to see what that does to inflation on the
But
other end of that.
CPI moved ticked higher.
Yeah, it was roughly in line. It was a little
Roughly,
higher,
yes.
roughly in line.
Yes.
Yeah.
It barely ticked higher, but it did tick higher. So cuts were seem to be put off, is
I'm
what
not
the impression is.
I'm not super optimistic about inflation. Again, when I'm calling a buy as an investor, and I don't want to sidestep, if somebody says, "Oh, I'm looking 10 years out," then sometimes that's kind of like, next year, this time next year, the stock is not doing so well. And I said, "Oh, I told you 10 years." That's not what I'm trying to do necessarily, right? I'm not trying to sidestep that kind of criticism if next year this doesn't do well. In fact, we can go over it again as we always do with our picks for the year. But I I like I said, I'm not super optimistic about inflation. I think it's going to be up and down and up and down and up and down. But over the course of time, I think this company continues to perform very well.
Nice. Cool. I like it. Moving on.
Next week, and we can just I know you're going to talk about one of these companies here, so I'm not going to steal your thunder. I promise you.
Well, we can just hold off. I could go into the two things I have, then we could talk about it
No,
together.
no, no. This is a good transition.
Okay.
So what I'm looking at next week, Netflix reporting earnings. Netflix is set to report its fourth quarter financial results. Analysts predict about $4.20 per share earnings on approximately $10.1 billion in revenue. So those are the marks you're looking at them, hoping they beat. Wall Street will be closely watching subscriber growth and looking for a increase in that after a slowdown in the third quarter. Next week, we've also got leading economic indicators. The Conference Board will release its monthly index of leading economic indicators, which is expected to remain unchanged from November. The index is designed to forecast economic conditions 3 to 6 months ahead, and it's never right. I'm just going to say that. It just doesn't. We're also going to get, on the same token as the company that I was just talking about, U.S. home sales. So we're going to get a snapshot from the National Association of Realtors on monthly home sales. Economists are projecting a slowdown in sales previously occupied homes. This is a slowdown in sales of previously occupied homes, excuse me, to a seasonally adjusted annual rate of 4.03 million. So
And you're talking about it's going to be lower year over year, right?
yes, so we're gonna have lower year over year, and they say it's because of elevated mortgage rates, rising prices, and tight inventory. So
So the reason why I specify that we have a lot of we I always hear feedback that we have a lot of new people who aren't big investors or have not traded much stock who listen every now and then. And I just want to be clear, like they could be hearing that saying, "Well, yeah, of course we're going to have fewer home sales in January." It's January of 2025 versus January 2024. So
yeah,
it's January versus January, not January versus July. That's
Yeah,
what Brandon's talking about.
year over year.
And that's what we mean when we say year over year.
Y O Y.
Right?
Yeah, that's all I got.
Okay. All
So
right.
we can
I
transition.
was waiting because I didn't know if you're going to get into it more. You're waiting on me. That's fine. We can wait on me. I want to cover a couple things real quick. I want to cover one thing first because I'm probably going to spend the most time on this. This is and Brandon even knew about this, which I was surprised because he's not big into the crypto scene. But article came out on CNBC said Solana surges 12% on launch of Trump-themed meme coin and Ether falls, right? That's what the headline reads. Okay. So the price of Solana jumped 12% on Saturday, according to Coin Metrics. Earlier suggested nearly 23% jump. Ether fell more than 6%. So why is Solana jumping? Well, Solana is jumping because of a Donald Trump meme coin that got announced and issued out. Again, what does this have to do with Solana? So the way that these meme coins work is I can't just go ahead and throw my credit card or debit card in and buy that meme coin. What you have these meme coins are most of them, not all of them, majority of these meme coins are traded off of another coin's um, paper, right? So you can only buy majority of these meme coins if you own Solana, and that's how you buy these is by owning Solana or Bitcoin or Ether or one of these main coins, and you use those coins to buy them. So this Donald Trump meme coin was only being able to be purchased if you own Solana. So it's on the Solana network. And that is what pushed Solana higher. And that's what's pushing Solana higher over the past year. So Solana has taken a big jump up because they created a network and all this paper and they created this system to where you could create lots of different meme coins all you want on the Solana network. But you have to buy and sell it using Solana coins. This is very, very entrepreneurial of them in order to do this. I like the attitude of them. They did it a lot for what I covered about, say, 2 months ago, Web3 gaming. And I covered how the Web3 gaming was talking about a new system of games that are out there and available that people can buy and sell different things within the games. Like if you had like Pokemon, everybody understands Pokemon typically, right? So if you had a Pokemon game out right now, you can trade cards with each other or sell your cards for a Pokemon coin within the game, and you could use that Pokemon coin and traded in for Solana. So Solana is the base for a lot of these Web3 games that have come out recently, where people are buying and selling different things and artifacts within the games. And it's also it's been the base for a while for these meme coins. So if you saw some TikToks or social media recently of kids out there rug pulling, this one little kid created a meme coin and rug pulled everybody because as soon as it came out, he sold it for like $13,000 and he was excited and happy and he started flipping off the camera and saying F you to everybody who bought it, like haha, and started laughing. So then because he said he sold all of his, well, then everybody came in and shot the coins worth up to millions of dollars just to put it to the kid. Like, you shouldn't have done that. But,
Yeah.
anyways,
Well,
this
then
is,
they probably put it to themselves too,
yeah, right.
because somebody's got to sell it. The same thing happened with that Haley Welch, the Hawk Tuah girl.
Yeah, yeah. And so this is all happening on the Solana network. So Solana is the coin that's being used for all of these, right? But that's why this latest Trump coin, so let's bring it back to the article. This latest Trump coin that came out, it's on the Solana network as well. So when that came out right ahead of the inauguration, boom, Solana just jumped up in price because people have to buy Solana in order to buy the Trump meme coin. That is what's pushing it higher. You also have two NFT collections. Here we're talking about NFT again. Somebody's trying to make money off of this. These are Trump digital trading cards that are only available on the Polygon blockchain or the Bitcoin blockchain. So it's very unusual. People are trying to make money off of the Trump name, where he's not directly or really indirectly involved in most of these at all, but it's his name, and you're allowed to go ahead and do it when it comes to crypto. Everything's, it's a kind of like the Wild West in that regard. Brandon's already getting a headache as I'm talking about this, but it's it's causing these cryptocurrencies sometimes to jump up and spike like this. And is it sustainable? No, but you know, it also could be sustainable if they continue coming out with new innovative meme coins or new games that use Solana as a base for in-game currency.
Yeah, you know what? I don't mind the deregulation part of it. I don't mind the Wild West part of it, but usually if you're selling something out onto the market, right, it's to answer a problem that people are trying to solve. Some of that Solana stuff is. So, if you're a gamer and you're trying to, there's some sort of collectible that you can't get, but you could buy it from somebody else or trade or whatever. That solves that problem, I guess, right?
Yeah.
But the meme coins, I cannot figure out what problem a meme coin solves or what function that serves in any way whatsoever. Bitcoin, we understand. Bitcoin, we know we're trying to get away. Some people try to get away from the US dollar because it's lost 99% of its value over the past 100 years. We want some sort of stable, currency. Bitcoin's been volatile, so it hasn't really served stable, as a stable coin yet. It's been very volatile, but eventually, hopefully, that changes and it just continues to gain a little bit of value over time because of its, you know, the supply of it is constrained, which is the point. But the meme coins, I don't understand them. And
There's
but
no purpose in them. There is no purpose in them
there's no,
whatsoever.
so that tells me that at some point in our lives they're gonna go to zero.
Yeah, just like NFTs. What was the purpose of NFTs? Was nothing but they were art that you could own.
But you could also Google art on your phone and save the images that you receive, and you have art on your phone.
Yes and no, but yes, I get where you're going. And NFTs have been are now a thing really of the past. They never reached the heights they were at ever again after that hype. But meme coins, yeah, I mean, there's not much of a purpose to it. But coins like Solana, there's a purpose. Ether, there's a purpose. Ripple, I've covered on the show. I hate to admit this for because Mark listens. There is a purpose to Ripple.
Yeah.
Um, there is a purpose to Ripple. There is a purpose to Ethereum. There's a purpose to some of these coins, and they serve to solve problems, like you said, Brandon, out there. But yeah, these meme coins, there's no purpose.
Well, the people that do the rug pulls on the meme coins, they give me very mixed emotions because on one hand, I'm like, you're a douchebag and you deserve to go to jail for taking advantage of people. But on the other hand, I feel no sorrow for the people that got taken advantage of and lost all their money
Right?
because
Because I mean, yeah, you invested in a meme coin, right?
you made a very stupid decision.
Yeah, yeah.
But on the regulatory front, people should be allowed to make stupid decisions.
And I agree, and that's why you have the app Kalshi, KALSHI. I shared it in our group chat, Brandon, a few weeks back, and people could bet on anything they want. There was a recent I was showing it to somebody yesterday, and there was a bet on whether or not the temperature in Denver was going to be above or below 10 degrees today.
My goodness.
And you're legally allowed to bet on it using the app Kalshi. So if you use the app, you can bet on things like that. And it was crazy. We were scrolling through the things you were allowed to bet on, and I was like, man, look at all this. And the guy I was showing it to, because I know he tends to gamble a lot. He's like, I just think I found my new favorite app, and I was like, you're ridiculous. Because I don't gamble. I don't gamble, but
Yeah.
I was just I find it interesting
The
that
late
these
Pete
things exist,
Rose. The late Pete Rose would have probably felt the same way.
right? Yes,
Rest in peace.
yes. So that's Solana, and that's why you have that headline. I mean, it goes into details and gives you numbers of surge in price, but I mean, you don't need to know that. You just need to understand why is it surging, and you just need to know why it in price, so you understand the why behind it, so you can look to find investments going forward. But yep, that's my crypto news for this week. On to something more fundamental that most people understand is the IMF and their related gross not growths, how they expect the economy to grow over 2025. So the IMF raises 2025 global US economic growth outlooks, but they flag protectionism related risk. This came across the news wires on January 17th, 2023 at 12:23 p.m. So on Friday, they increased the growth expectations this year, but they said the balance of risk to overall outlook is tilted to the downside in the medium term. They're saying they project 2025 global real GDP, that's gross domestic product growth, at 3.3% for the global, up from a 3.2% gain estimated in October. So the estimate continues to go a little bit higher. Continues to see 2026 growth at 3.3%. And they call their latest outlooks are below the historical growth average of 3.7% historically. Now, going to the U.S. specifically, U.S. real GDP growth rate for this year is now projected to be at 2.7%. That's up from the previous outlook and estimate of 2.2%. So they're saying this because of robust demand conditions that reflect strong wealth effects and a less restrictive monetary policy stance. Um, they're saying that they they also updated 2025 economic growth estimates for countries like China and Russia and Germany, France, Italy, and Canada were among those seeing downgrades. So they're downgrading China, they're downgrading the big ones in Europe. They're downgrading them. What they're saying is in Europe, economies could slow more than anticipated, especially if investors grow more concerned about public debt sustainability in vulnerable countries. In China, what they're worried about is physical and monetary measures if they prove to be insufficient in addressing domestic weakness. If you're like David, I have no idea what any of that means. Here's what that means. Let's talk about China first and why they're saying that they're downgrading China for this year. They're concerned with China had a weak economy last year and the second half of the year before that. So last year, 2024, second half of 2023, they've had a slowdown in the economy. Well, China has boosted that by putting in money into the economy. So what in the United States we would call a stimulus. They've been doing this specifically for the EV cars last year, a whole bunch, but for a broad economic across all parts of the Chinese economy, they've been doing this. So they're concerned that if these stimulus don't continue, that China could fall, and that's the IMF's concern there. In Europe, they're concerned more about the debt sustainability in some of these other countries that can't continue to grow. Germany can continue to grow, but Germany's holding up some of these other countries. So if these other countries start to fail or not be able to pay back their debts, and Germany has to foot the bill, and that's going to be bad for them. That's some of the concerns there. I know I just spat out a lot of information. Brandon, any initial thoughts, or I could continue?
Yeah, no, you can continue.
Okay.
I'm
So,
still processing.
all right. So, basically, now we'll get into the part where they're worried about the next administration, Trump administration. They said that many of the potential policy changes under a new Trump administration are hard to quantify accurately. That's the quote from the IMF head here. Some indicated policies, such as looser fiscal policy or deregulation efforts, would stimulate aggregate demand, saying it would help the demand, increase inflation in the near term, but not the long term, and as spending and investment increase immediately. They went on. He also went on the right that other policies such as higher tariffs or immigration curbs would play out like negative supply stocks, reduce in output and add into price pressures. Um, I don't. I don't know if I. I kind of see where he's going with this and why he's saying it's like a double-edged sword of the United States. They still see us growing as an economy, but they're concerned more about how some of these other policies will play out. And until they know exactly what's going to happen, what they're saying is they're giving us timid growth estimates for us.
Yeah.
Higher inflation would prevent the Federal Reserve from cutting interest rates, which is what you and I just talked about, how the inflation number came up 0.2% higher than expected. And I was making a comment that, hey, that's going to push off interest rates cuts. And that could, but the IMF here says that could even require rate hikes, which in turn would strengthen the dollar and widen U.S. external deficits.
Hmm.
Um,
Well,
Go ahead.
2.7% historically for the United States GDP growth is actually pretty good. It's not terrible. Um, I wouldn't even call it neutral. I'd say it on the high end. It's a pretty decent deal for the U.S. Um, my two-edged sword for the Trump administration is it seems like with the new Department of Government Efficiency, they may be looking at cutting spending, which helps inflation, which is good. But just judging on his first 4 years in office, he's going to put political pressure on the Federal Reserve to lower interest rates, which I think you should only raise or lower interest rates if you see an economic need to do so. It shouldn't be a political thing. And the double-edged sword to that is lowering interest rates increases inflation over the long haul. But at the same time, what could counteract that is a decrease in government spending.
There, exactly. And yes, um, Trump in the past has tried to put direct pressure on the Federal Reserve, and Powell has been reluctant to give in and has been very vocal against that.
And as far as his protectionist policies, I don't know. This is one of the things that I look at Trump and I say, I don't know if I should take his word for it or not. And I'm not calling him a liar. I just think he's a good negotiator. And I'm not sure that he's as protectionist and as sold on tariffs as he says he is. I think he just comes off like that on purpose to have a foot up on, whoever he's trying to negotiate with. Look at the
Basically saying we're
TikTok
going
thing.
to take $100 from you, but when they get to the negotiation table, they only take 60.
Right. Look at the TikTok thing. The TikTok ban was initially one of his ideas. And then the Biden administration went through with it. It was upheld by the Supreme Court. The TikTok ban was going to go through. Now Trump is saying we're gonna, push he's being inaugurated tomorrow. So now Trump is saying, let's not ban TikTok right now. And I think the reason that he did that was because if we do ban TikTok right now all of a sudden one of his ways to negotiate is gone because it's already done. It's already banned.
Yeah.
If it's already banned, he can't then say we're going to ban it if you don't do so and so. So it's a negotiating tactic. It's a negotiating tool. And
Well, he lifted the ban a day after having a roundtable with the is it President Xi of China or is it Prime Minister Xi of China?
it's President
President, yeah, the president of China. Him and Trump had a phone call the day prior before TikTok ban got lifted.
Yeah.
What did they say on that phone call?
And now he did pass a bunch of tariffs against the European Union and China when he was president, but some of those he also lowered during negotiations. So we'll see how that works. I'm kind of discounting that right now as far as my investments go. I'm discounting the protectionism and the tariffs. I'm not even paying attention to it.
Well, here's also something I want to remind our listeners of. I've quoted the IMF before, and the IMF has come out in the past 6 months when I've quoted them on the show, and they've criticized the U.S. saying that we are overspending, that our debt is too high, which our debt is very high. Our debt is 30% of the global debt of countries in the world. Just to let everybody know, of all the countries' debt in the whole entire world, the U.S. has 30% of that debt is what we've caused. Now, saying that, the IMF has been wrong in the past. Every time they've come out and been very critical of the United States. Not every time, but they've been wrong in the past year. And, are they going to be wrong again? Or, because there are some very, very smart, intelligent people that work at the IMF. Or do they have it right this time? And that's my question, Brandon. What do you think before we move on?
Yeah, no, I
Do they
think
have it right?
they may actually have it right. U.S. debt as a percentage of GDP now is 123.1%. That's an alarming number.
Yeah, that's a huge number.
We're closing in on where Japan was, I would say, about 10 years ago, 15 years ago, and stocks did not perform very well until recently in Japan when they started to get that under control. 123.1% is kind of scary. So they might be right about that. Um, I also think, everything everything else you just said is, depth as far as the European countries go. I mean, I look at Brexit and I think pretty good idea.
It was a great move by Britain.
Yeah.
It was a great move by Britain, financially,
Yeah.
economically speaking. So, yes, yes. All right, I just want to put that out there. Something to think about going into this year. That's how U.S. compares globally according to the IMF, and how what the IMF is looking at as other countries. So they're concerned about China. Is the stimulus going to work there? Is it the economy in China going to continue after the stimulus stops, or are they going to have to continue having stimulus? China does not mind printing money. They have a different policy than we do here. They don't mind having inflation because then they continue to have that worker base that is cheaper to have and build products there
Uh,
versus
It's,
other
it
countries.
still hurts them economically. It still hurts their workers economically. I'm not so convinced that President Xi has his workers in mind. I don't think that a dictatorship necessarily cares about that.
Yes, I mean I agree, but I mean they're not concerned about printing money, so
They
they'll
want all
continue
their
doing it.
friends, they want all their friends to get richer. It actually makes the corporations, the international corporations out of China, a lot richer, but it crushes the poor people.
Yep. All right,
And,
moving
and I will
forward.
say this, hey, we criticize China for doing this a lot for currency manipulation. We do it through the back door. We
Yeah,
do.
I
It's called the Federal Reserve, maestro in the interest rates. We do the exact same thing with the exact same end goal.
They're a little more blatant about it though, and they're a little
They're
more
in your
like, "We're gonna
face.
do this, and this is what we're doing,
Yeah.
and what are you gonna do about it?"
Yeah.
You know,
But who are we to criticize? We just
but
found a new way of doing, or another way of doing it, 1913, when we created the Federal Reserve.
in the Fed. All right. Here we go. Looking ahead for this week, earnings. I want to talk about earnings coming up this week and what I'm going to be focused on. A lot of bank earnings coming up on Monday. The markets are closed. On Tuesday, Charles Schwab. You got FB Financial, Fifth Third Bank, Key Corp Bank, Old National Bank Corp, People's Bank Corp, all coming out. You got Netflix on Tuesday after the bell. That's what Brandon was talking about. I am going to make a call right now. Netflix is going to beat. That is my call. Netflix will beat on earnings. So buy if you want to, but I would wait and see what it's doing pre-market because if it moves higher pre-market, then you might want to just chill.
Yeah.
That's my opinion. Um, all right. So after the close on Tuesday, you got Capital One Financial. They just had I guess you could call it an event recently where on Friday they weren't paying out towards people who had direct deposit in the Capital One banks. They weren't able to get their paychecks. They weren't processing payments there. They say that they worked through it all and there's no longer a problem, but we'll see what happens to the stock come Tuesday morning. They report after the bell. Pinnacle Financial Partners, Simmons First National Bank, Wintrust Financial, a lot of banks. It's a bank week. Going into Wednesday, this is another one I think is going to beat again. GE Vernova. So let me cover a little bit about this one. Uh, GE Vernova has nearly doubled in value on the price chart since last April when the
You're welcome.
gas power renewable energy business split from General Electric, right? So everybody is seeing more upside for GEV this year, thanks to growth in artificial intelligence and data center power demand. It's what I've talked about on the show. It's what Brandon's talked about on the show. We have both talked about this on the show. They really recently raised their price target to 420 from 400. I expect it to keep going through that. The company's fourth quarter results are due out ahead of Wednesday's opens. So what the most of the analysts are expecting is a revenue of 10.4 million, slightly below the average. So the average estimate's 10.7 billion. Sorry. Um, and they're seeing earnings of $2.37 per share. We'll see what actually happens. All right.
Mhm.
Um, yeah, so that's coming out Wednesday before the bell. Other ones coming out before the bell. Looking through here, Johnson and Johnson. That's a good one. And Procter and Gamble. They report typically around the same day. They're considered to be ones that are a good sign of where the overall economy is, since they hold a vast array of different products underneath those brands. So that's what people usually look to them for on that. Moving on, you got just you know just a lot more small regional banks. Regional banks, I guess we're going to look for to see if they're still reeling from that bank crisis in the spring. The regional bank, where they thought a lot of regional banks were going to disappear, and they didn't. They held on. That's something to keep an eye on. You do have Alaska Airlines, American Airlines also reporting this week. But the other GE company, GE Aerospace, will be reporting this week. So a big week for the former GE companies. Brandon, any ones that I've mentioned that catch your eye?
My second largest holding is GE Aerospace. So
Really? Okay.
it's below Meta, just below Meta, and just above Google
All right. Well,
or Alphabet.
that's going to be reporting this week. Intuitive Surgical, big company, just recently had a big deal announced in last 2 weeks ago. Let's see how they do after the deal is announced with their earnings. You got American Express reporting before the bell on Friday. All right. That's all I have. Brandon, final thoughts.
Oh, we finally got Amazon's bestseller list for 2024. The MetaQuest 3S was the best-selling console in the video game category. Came out at number 11 in the video game industry for the year, which was mostly dominated by gift cards and the Xbox Game Pass subscriptions, which is interesting because Xbox didn't even make the top 80. The console did.
Wow.
PlayStation 5 Slim came in at number 17. The Nintendo Switch was at number 53. Um, PlayStation 5 Pro was not on the list either. The only devices that surpassed the MetaQuest 3S were the Nintendo branded micro SDXC card and the PlayStation DualSense wireless controller. So pretty good holiday season for the MetaQuest 3S, it looks like, and year overall. MetaQuest 3S, that value offering seems like it was a success. I know the PlayStation 5 and the Xbox X have been out for about what, 4 years now.
Yeah, around there, yeah.
But
Around there. We
that's
covered it on the show. We haven't been out for 4 years, so it's been less.
yeah. So we just bought a MetaQuest 3. I don't know, a couple weeks ago, and we're gonna buy another one this week because we love it so much, and she won't get off it.
So
I'm not getting enough time.
For our listeners here, I've tried to get Brandon to join me in the VR world for years, and he finally breaks down, and now he thinks it's the best thing since sliced bread. You're
Yeah,
welcome, Brandon.
I get into the immersive videos. That's my favorite thing is the immersive videos. Watching sports on the big screen inside the Quest S is or the Quest 3 is one of my favorite things. Also, the X Stadium app. I'm plugging the Xbox or the Quest 3 right now, but it's awesome. You guys, if you haven't tried it yet, you should definitely try it.
There you
It's
go.
good time. It's great. It's all in one movie theater. You kind of got to get the extra batteries with it though, because you get about an hour before that stock battery dies. But if you get those plug-in batteries, you're adding about 2 hours to it. You can watch all of Titanic with one of those, or better yet, Saving Private Ryan.
All right. There you go. Final thought from David. I actually got some stock news. Not that I don't love VR, I love VR, but I'm gonna, GE Vernova I think is gonna beat on earnings, and Netflix I think is gonna beat on earnings. GE Vernova did have a big run up this past year, but they're gonna have continued long term positive news with the data center and AI involvement. So that's a plus side for them. I don't know if Netflix is going to have long term positive news, but I know they're going to have a good quarter this quarter. So take that for what you want to take it for. I don't have any other calls as of right now, as far as like I'm 100% buying this, but as we get closer, I might buy GE Vernova. Depends on what it opens up pre market, because I could buy pre market and see where it's at on the price. That might be one I buy. So
Yeah. Netflix has had a lot of catalysts this quarter. I mean, they had the Jake Paul, Mike Tyson thing, Monday Night Raw going live for
yep.
WWE on them, and a lot of people might laugh at that, but that's a global product that's going to bring a lot of viewers in. So yeah, I'm positive for sure on
They've
that.
been big on the live events, so I'm very positive on Netflix quarter this quarter. But long term, I want to see where they take it from here. Like, what did they do with it going forward?
Right.
All right. Thank you guys for listening. If you like what you heard, please hit the subscribe button. As always, we hope we've been entertaining, educational, and uplifting, because we want everyone to make money. Have a good night.
Have a good night.